Good morning and welcome to Storm Stock Solutions. I'm Grant Mercer, and we're getting you set up for the trading day ahead, bringing a little clarity through the chaos before that opening bell rings. Let's start with the key drivers on the tape this morning. According to reporting from MarkWatch, FedEx is front and center after the company guided to more profit this year, pointing to a turnaround in a key part of its business. Why does that matter beyond one stock? FedEx is a classic barometer for global trade and shipping demand. When management says their overhaul is taking hold and profitability is improving, traders often read that as a tentative green shoot for industrial activity and e-commerce volumes more broadly. It doesn't override macro data, but it adds a constructive tone for the transport and logistics space as we head into today's session. On the policy front, another big macro story with sector-specific fallout. Marijuana stocks are under pressure after President Trump signed an executive order directing the federal government to reschedule cannabis. MarketWatch describes this as the most significant federal reform on the substance in decades. Structurally, that's a long-term positive for the industry's legitimacy and access to banking. But the initial market reaction has been a sell-off. When regulation shifts, existing business models, tax positions, and competitive dynamics get repriced quickly. And that's exactly what we're seeing as traders sort winners from losers in the cannabis ecosystem. Now, in terms of areas of strength and potential opportunity, the theme isn't so much sectors this morning as it is specific corporate stories that could grab attention once trading gets underway. Micron is one of the names traders are watching closely. As MarkWatch put it, Micron just had its Nvidia moment with a dramatic earnings beat tied to AI demand. Analysts are growing more upbeat about Micron's role as a key beneficiary of the AI infrastructure building out, especially around high-bandwidth memory and data center exposure. Professionals will be watching how much of that optimism is already priced in, and whether the stock can sustain any pre-market momentum once liquidity deepens after the open. Another pocket of interest is Oracle, on the back of TikTok headlines. Reporting from MarketWatch highlights a memo from TikTok's top executive outlining a U.S. joint venture that would reportedly lean on Oracle's cloud as its backbone. That reinforces a broader theme: established enterprise cloud players trying to tie themselves to high-growth consumer platforms. Traders are likely to focus on what this means for Oracle's cloud revenue trajectory, and whether it changes the narrative from legacy software giant to infrastructure partner for social media scale. Let's flip to the risk side of the ledger. The cannabis space is the clearest handle with care area this morning. The Trump executive order to reclassify cannabis is a structural milestone, but the immediate price action, as MarketWatch notes, has been a broad sell-off. When you see a sector react negatively to what sounds like good regulatory news, it usually means expectations, valuations, and tax or licensing realities are colliding. Traders will be watching for continued volatility here and parsing which operators could be squeezed by changing tax treatment, shifting competition, or new compliance costs. This is an area that looks fragile in the short run, even if the long-term story is evolving. More broadly, Uber is another name under the microscope. MarketWatch cites Bernstein analysts arguing that Uber's stock is almost historically cheap and that investors may be overly fearful about the existential threat of robotaxis and widely licensed autonomous vehicle tech. That sets up a tug-of-war between valuation support on one side and long-duration competitive risk on the other. For shorter-term traders, that can mean sharp moves on any incremental news around self-driving partnerships, regulation, or ride-sharing demand. In the background, we do have a few under-radar watchlist stories. Nike is a good example. The company beat Wall Street's expectations in its latest quarter, but as MarkWatch reports, margins shrank and management described their turnaround as being only in the middle innings. That kind of language tells you this is an ongoing repair story, not a finished product. Names like Nike often become battlegrounds between investors who see an early-stage recovery and those focused on still soft profitability. It's the sort of setup that can quietly build energy and then matter a lot more if the next quarter shows clearer margin traction. FedEx also remains in that crossover space between macro read-through and individual stock story. If the market embraces its profit outlook as credible evidence that the restructuring is working, it can bolster sentiment in transports and cyclicals. If traders fade the move, it may signal skepticism about the durability of global shipping demand. As we head into the open, the key themes to keep on your radar: transports and logistics sentiment around FedEx, AI infrastructure enthusiasm around Micron, regulatory shockwaves in cannabis, and competitive tech questions around Uber and Oracle's cloud positioning. We'll see how futures translate those narratives into actual flows once the bell rings. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.